Assalamualaikum warahmatullahi wabarakatuh. My name is Vindi Saputra.
My name is Izal Latwalia.
My name is Tiara Flavia. We are from Group 1. We'll present about understanding value-added tax and tax subject of value-added tax.
Keep on watching.
The first one is the definition of value-added tax. Value-added tax is a collecting imposed on the sale and purchase of goods and services carried out by personal taxpayer or corporate taxpayer who have become taxable entrepreneurs. So, those who are obligated to collect, deposit, and report value-added tax are the sellers. However, the party that is obligated to pay value-added tax is the end consumer. Value-added tax is imposed and remitted by entrepreneurs or companies that have been confirmed as taxable entrepreneurs. And the next is the legal basis of value-added tax. The first one is Law Number 8 of 1983 about value-added taxes and services and sales tax on luxury goods. Law Number 8 of 1983 regulates the customs area, tangible goods, and taxable goods. The delivery of taxable goods in this regulation regarding value-added tax is the delivery of taxable goods due to an agreement, the transfer of taxable goods due to a lease agreement, and the transfer of production result in a mobile condition. Meanwhile, what is meant by the delivery of taxable services includes the provision of taxable services carried out within the company environment for its own interest. The value-added tax rate is set at 10% and the tariff on the export of taxable goods and services is 0%, provided that it can be changed to a minimum of 5% and a maximum of 15%. The second one is Law Number 11 of 1994 about amendments to Law Number 8 of 1983 about value-added tax on goods and services and sales tax on luxury goods. 10 years after the enactment of Law Number 8 of 1983, Law Number 11 of 1994 was made. Some of the important points of this policy are the explanation of value-added tax as an indirect tax that is calculated by the seller but paid by someone else or the buyer. Furthermore, the legal basis for this value-added tax explains the existence of the multi-stage tax system as a tax imposed in stages on the production and distribution chain. Every delivery of goods that are subject to value-added tax from the factory, wholesaler to retailer is subject to value-added tax. This regulation also regulates the indirect subtraction or invoice method, which is how to calculate taxes using the indirect method against taxes and on domestic consumption as taxes imposed definitively on consumer goods in Indonesia. The third one is Law Number 42 of 2009 about the third amendment to Law Number 8 of 1983 about value-added taxes and services and sales tax on luxury goods. This law discusses a number of changes from the previous law, such as regarding the status of taxable entrepreneurs as the party obligated to deposit and report value-added tax and sales tax on luxury goods owed, to the obligation of small entrepreneurs who have chosen to be confirmed as taxable entrepreneurs. Law Number 42 of 2009 also stipulates the value-added tax on the delivery of taxable services that is cancelled, whether partially or completely, can be deducted from the value-added tax payable that occurs during the tax period when the cancellation occurs. And the next is the taxable entrepreneurs. Taxable entrepreneurs are entrepreneurs, both individuals and entities, who deliver taxable goods and taxable services, which are subject to tax based on the 1984 Value-Added Tax Law and its amendment. The definition of taxable entrepreneurs doesn't include small entrepreneurs, whose limits have been set by a decree of the Minister of Finance, unless the small entrepreneurs want their company to be confirmed as taxable entrepreneurs. And the next is the non-taxable entrepreneurs. Non-taxable entrepreneurs are entrepreneurs who have not been confirmed as taxable entrepreneurs. Therefore, all rights and obligations borne by taxable entrepreneurs cannot be carried out by non-taxable entrepreneurs. Entrepreneurs with a turnover above 4.8 billion rupiah are basically obligated to become taxable entrepreneurs. However, if you have a turnover more than 4.8 billion rupiahs but not yet a taxable entrepreneurs, then you cannot collect value-added tax and issue the tax invoice. So, in general, the difference between taxable entrepreneurs and non-taxable entrepreneurs is in their obligation and rights. And the next is the obligation of taxable entrepreneurs. The first one, entrepreneurs who have been confirmed as taxable entrepreneurs are required to collect payable value-added tax or sales tax on luxury goods. The second one, entrepreneurs who have taxable entrepreneurs are also required to deposit underpaid value-added tax or sales tax on luxury goods. The third one, after collecting and depositing, entrepreneurs who are already taxable entrepreneurs are required to report or submit the periodic value-added tax or sales tax on luxury good, letter of notification or SPT owed. If the small or non-taxable entrepreneurs in 1 year the turnover has reached the specific figure, then the non-taxable entrepreneur must report his business to be confirmed as taxable entrepreneurs no later than the end of the following month. However, if within the one financial year, the gross circulation of entrepreneurs who have become taxable entrepreneurs doesn't exceed the predetermined turnover limit, then the taxable entrepreneurs can apply for the revocation of taxable entrepreneurs inauguration. And the next is the rights of taxable entrepreneurs. The first one, entrepreneurs can credit input tax on the acquisition of taxable goods or taxable services. The second one, entrepreneurs can also make restitution or compensation for the excess value-added tax that taxable entrepreneurs pay.
PKP rights over VAT. If an entrepreneur has been confirmed as PKP, then there are rights and obligations that must be fulfilled by PKP. Well, here are the PKP rights over VAT. PKP can credit the input or purchase tax on BKP or JKP. PKP also asks for a refund if the input tax is greater than the output or sales tax, and is also entitled to compensation for the excess tax. And next, PKP liability for VAT. First, PKP is required to report its business to be confirmed as PKP if it already has a turnover 4.8 billion in one financial year. Next, PKP is required to collect PPN and PPNBM payable. And then, PKP is also required to deposit the accrued VAT in the event that the output tax is greater than the creditable input tax. In addition, PKP is also required to deposit PPNBM payable. Next, PKP is required to report tax calculation into the periodic VAT SPT. And the last, PKP is also required to issue a tax invoice for each BKP or JKP submission. Understanding small entrepreneur. An entrepreneur is someone who carry out business activities, both buying and selling business, and production that have the main objective of making a profit. Entrepreneur must also be prepared to bear the risks that may occur in their business activities. Based on the scale, entrepreneurs can be divided into small entrepreneurs, micro entrepreneurs, and medium entrepreneurs. Well, this presentation will explain more about small entrepreneur. According to the Minister of Finance Regulation number 197/PMK03/2013, small entrepreneur are entrepreneurs who deliver taxable goods or taxable service or BKP or JKP with a gross turnover or gross revenue not more than 4.8 billion rupiah. The amount of gross revenue referred to is the total number of BKP or JKP submission made by entrepreneur when conducting their business activities. Small entrepreneurs are not required to collect VAT. Small entrepreneurs are not required to report their business to be confirmed as a taxable entrepreneur or PKP, and are not required to collect, deposit, and report value-added tax or PPN and sales tax on luxury goods or PPNBM payable. In the context of taxation, small entrepreneurs have a legal basis which is regulated and discussed in the Minister of Finance Regulation number 68/PMK03/2010 concerning limitation of small entrepreneur. Small entrepreneur become taxable entrepreneur. As previously explained, small entrepreneur are not PKP, but small entrepreneur can become taxable entrepreneur if they choose to be confirmed as PKP or meet the requirements as PKP. Small entrepreneur are required to report their business and be confirmed as PKP if any one time the gross revenue has exceeded 4.8 billion rupiah. Small entrepreneur who have been confirmed as PKP are required to first collect VAT from customers and report periodic VAT SPT for each tax period. Small entrepreneurs who choose to be confirmed as PKP are usually entrepreneurs who have business activities with the following three parties. First, government treasurer as VAT collector, and BUMN as VAT collector, and the last, private companies requiring input tax.
Okay guys, we will continue and we will talk about certain entrepreneur individual taxpayers. The definition is when carrying out business activities as a retailer who has one or more place in business. In this case, the domicile is different from the place of business activity. It can be in one area of the tax servant office or different area of the tax servant office. What is meant by a retailer is an individual who does. The first one is sales of goods, both wholesale and retail, and the second is delivery of services. And then we will talk about institutes of certain entrepreneur individual taxpayers. It comes from Income Tax Article 25. The purpose of the imposition of Income Tax Article 25 for individual taxpayers of certain entrepreneur is for simplification. So, you do not to collect turnover, net income, and tax calculation in determining Income Tax Article 25. You only need to pay specified rate per month for each place of business. Except for those who have applied the provision of final income tax based on the PP 23 of the 2018. The obligation to pay Income Tax Article 25 for the certain entrepreneur individual taxpayers is eliminated. And then the example of calculation Income Tax Article 25 of certain entrepreneur individual taxpayers divided into three. The first one is residence and the place of business are located in one tax servant's office. And the second is residence and the business place are different from tax servant's office. And the third is residence and the place of business in more than one tax servant's office. Okay, we jump into the next discussion. So we will talk about revocation inauguration of taxable entrepreneurs. What does it mean? It means that it's a step taken when the taxable entrepreneur status is deemed unable to be fulfilled by the taxable entrepreneur itself. This taxable entrepreneur's revocation step is carried out at the request of taxable entrepreneur or carried out by the Directorate General of Taxes, which feel that taxable entrepreneur concerned no longer meets the requirement of the Directorate General of the Tax. Okay, in detail, Directorate General of the Taxes will carry out the process of revoking of the taxable entrepreneur's inauguration against taxable entrepreneur, which is included in the following criteria. The first one is taxable entrepreneur, aka PKP, with non-effective taxpayer status, and the second is taxable entrepreneur whose existence and or business activities are not known. The third is taxable entrepreneur misuse its taxable entrepreneur status. And the fourth is taxable entrepreneurs move address to another tax service office or tax servant office working area. The fifth is taxable entrepreneur no longer meets the requirement as taxable entrepreneur. Taxable entrepreneur has been centralized where the value added tax, or we know that PPN, is payable in another place. And the seventh is taxable entrepreneur that has not met the subjective or objective requirements in accordance with the provision of the taxation legislation. The cancellation of the taxable entrepreneur's inauguration can be done in two ways. The first is, namely, at the request of the taxable entrepreneur itself, or the second is carried out by the Directorate General of Tax directly. And the last is, for the procedure for revoking in the taxable entrepreneur inauguration on the taxable entrepreneur application, it can be done in two ways also. The first way is applying for the withdrawal of the taxable entrepreneur inauguration in online, and the second is manually.
That's all the explanation about definition and subject of value-added tax.
We hope you can understand about our explanation.
Thank you so much for watching. Assalamualaikum warahmatullahi wabarakatuh.